Hello, this is Dave, and welcome to Equity Story. I'm with the wonderful Wolf, who's again looking very trendy in a new T-shirt. How many T-shirts did you buy in Poland? Did you buy?
I spent thousands of dollars, Dave.
Yeah, I know. I've never seen so many new T-shirts. Anyway, this is just a general share advice and not personal. You could have bought me one.
You know, that's why inflation is going up. I'm not stopping spending.
What?
I'm like the canary in the coal mine. Once I stop spending, you know, inflation is going down. Time to load up.
All right. Okay. On that note, Wolf, let's get into these stories because we've got a few to go through, and I'm going to start with Son because it was sad when you're away, right? Because we got this little price action, and I remember looking at this, and I think I put it on Einstein, and I remember thinking it's so lightly traded, Son. And I remember thinking, oh, the chart, that's looking good. Maybe Som's back because I know Wolfie quite likes the story.
Yep.
So they put an announcement out today. Are they back?
Not quite, but one to watch because there's a lot to like, but there's stuff that I don't like about it, right? So I like the fact they're growing very strongly at the top end. The problem is they are still squirting out a lot of cash out, right? Which is the market just doesn't like that. So unfortunately, this one is one of those. I think I'll probably just put on a watch list at best right now.
All right, so it's not a buy.
No.
Let's go to another stock that likes squirting out cash, Dubber.
Yep.
Tell us why the market's not liking this one, Wolf.
It's actually not too bad. I mean, it's jumped a little bit today, but you know, it's the reason why it's come down from $4 to $3. Sorry, for 30 cents. Again, bleeding cash left, right, and center. Then they restate. Remember, they restated the one of the quarterly cash flows. I mean, it's just unfortunately a little bit of a basket case right now. Even though today's quarterly actually wasn't too bad when you look at the top line. But again, if you look at the bottom line, so the top line when I'm talking about these revenues, right, that was up to about almost $10 million. But then you look at the bottom line, and that was like a minus 20 million cash outflows. It's like, okay, this is ridiculous. Why so much? Why so much expenditures? Yeah, so you've got to go past.
Well, they're obviously really struggling to get traction on the product, aren't they?
Well, you know what I think it is? I think it is the good old, you've got a product, right, to sell. The problem is you're relying on someone else to sort of products, websites, you name it. So you've got to pay them a lot of money to do so. So it's almost one of those, they're trying to catch your own tail. And the more revenues they get, the more spending they go. So I don't know how they're going to break that cycle, to be honest.
Most of those revenues, what percent are recurring now? I
can't remember, to be honest. I apologize. I can't give you a precise figure. I'm not sure.
Okay, but we don't like it anyway. We didn't like it since it broke $3.
That's exactly right. So we're not touching it.
We're not touching it.
Pretty simple.
So why did we talk about it? Do we just like?
I just wanted to talk about, you know.
Do we like to show everyone how right we were when we said?
No, I mean, the thing is, you know, it was one that we did follow. So I just want to see where they are at. I mean, I suppose. I mean, that's what we're doing with it, just catching up to see where they are.
Right. ALK.
We've got nothing to talk about.
All right. ALK. We do, because afterwards we've got your top 10 nibbles.
Yes, you do.
I'm very excited about.
All right.
ALK. Boda is a very, very potentially exciting gold project. Is it still an exciting gold project?
It is, and you know, they've done more drilling. So the drill is outside the Boda, I believe, resource, and it came up with about 1,000 meters of about 0.6, I think, combined copper and equivalent. So that's pretty good. So I think it is about 0.37 grams per ton for 1,000 meter intercept. That is, you know, very decent. And like I said, you know, many times, I think Boda has to be probably in the cost house of NCM, and they'll probably move sometime along the line. I'm not sure when though.
Well, it's interesting, Wolf. Now, MAD, obviously, in Einstein's had the breakout last week. It's gone on with it this week. The announcement, what did you make of the announcement?
Upgrade, Dave, upgrade. I mean, if you look at the numbers, and it's actually quite good to go through them. Maybe if you've got that announcement up, we can have a look at it, but I'll quickly go through it while if you don't. So in other words, they've come up with about a 400 million in FY22 revenues, right, for the full year. And I think about 26 million in NPAT. So in August when they talked about the FY23 numbers. So they gave us guidance, which was nice of them. Not many companies did that. And they gave us about 510 million. So there's going to be about a growth of about 30%, right? On the previous numbers, and 33 million on NPAT, which is about 30% also. So that was your go for yourself. All organic, fantastic. What a business I'm getting in. That's why we're liking it. But today, they've actually increased that even further, Dave. So for 510 million in revenues for FY23, they're talking about 550 million. So that's another 8% upgrade, with about 8% upgrade to the bottom line from 33 to 35 million. I put that now to growth of almost 40%. So in other words, growth is actually accelerating here. You've got to be in this, I'd say.
And I've got trading 25 times.
So if you're looking at almost 40%, say NPAT growth, right? You're now dropping. What do you say they were trading on? 35?
25 at the moment.
Okay, so that would put them back under 20. That would probably put them about 17, 18. That's good.
Yeah, it's going higher, isn't it?
You'd think, right? It might have its ups and downs, the good old wave pattern, but I think it's going higher. Great business. And then, you know what? The other thing is, in a really tough market right now for inflation, the margins only just dropped a little bit. So all overall, pretty good.
Very, very good. Excellent. Drone Shield, Wolf. A few more orders.
Yeah, I think I was out of Asia, wasn't it? Or
yeah.
Asia. It was. Yep.
So interesting. Just starting to get a little bit of attraction, and I know there's a few real believers in Drone Shield. One lovely lady member, she loves the story, so she could well be right. At the moment, it has poked its head above the water level and doesn't look too bad, and possibly could go higher in the short term. BRI, Big River. Wolfie, this was a recommended buy that we put on just before you went to fight for your homeland. Well, you didn't fight. You just bought some shirts and you came back.
Yeah, well, I went, like, basically I bought and I quickly ran away.
Yeah, well, you got some t-shirts anyway. BRI, Wolf, what
yes.
did you have a chance to have a look at the
I did. I actually went through the first quarter 23 trading update, and I've got it right in front of me. And I like what I'm seeing, Dave, here. We've got basically from first quarter 20. So this is PCP, which is the previous corresponding period. So first quarter 22, they come up with 192.6 million in revenues. First quarter 23, talking about 123. That's a 33% growth. PCP, so previous quarter numbers. When you look at EBITDA and EBITs, you're looking at about 62% and 83%. So in other words, margins are increasing here by the looks of things. Dave, you've got to be fairly comfortable if you're in this, or maybe even a trade here or there. I mean, organic sales revenue up 20.4.
Well, we are trading at the moment. The market has been a little bit shaky. And you know what we said? It's just given people an opportunity to get into the stock under that 220.
Yeah. Okay.
So hopefully we've got a lot of patient people in this. And if you've got that long-term approach, BRI could be.
Yeah, I like what I'm seeing today. So I think that maybe you could see that we test at 240. So that could be another 20% out of this.
Very, very nice. RWC.
Okay, I didn't see that one, so let me have a quick look right now.
Well, we don't have to talk about it. It's just we've sort of.
No, let's have a look at the trading update. So let's have a quick look. I am going to have a look right now, opening it up. Sales for the period were 300 up 23%. So the market didn't like something in there, did they? Because it's down, I think, 10%. Is that right?
Yeah. All
right. So I need to probably have a further look into it to see why the market sort of said no. I'm just having a look at the margins gone down. Okay, so maybe that's one that's down 170 basis points. And the margins down significantly on some of those. So in other words, cost inflation, Dave, I think it's hitting RWC quite heavily, significantly. And also the other things you probably don't want to like to see is net debt up from 160 million to 518. That's a 223% increase there as well. So, in a inflationary world, interests are going up. You don't want to see your net debt spiraling up from 160 to 518 million. So maybe there's a couple of things in there that the market's just not quite liking.
And ALD, Wolfie, also down 7%. And the question is why? Because this company should have a lot in its favor at the moment.
It does, because we had a look at, remember Viva Energy, right? Yeah, and that was bloody good. That was trading quite well. So, you know, you've got to ask yourself what difference is to ALD. Let's have a quick look. So I'm looking at 2022 restated. That looks pretty good. I can't see right now anything maybe out of the ordinary. And what I probably need to have a look at is further into it, maybe some outlook and something like that. But I'm not sure why it's not as good as the other one, to be honest. Not sure.
Yeah, well, the charts say at the moment you wouldn't be in it when it broke trend, and you certainly wouldn't be.
Fair enough.
Be in it at the moment.
Fair enough.
Wolf, were there any other ones that you wanted to?
No, that was it. I was actually fairly benign today. You know, the only theme I picked up on, you know, the Chinese is he's got another 10 years, which is obviously not great. One man should not be in charge of such a long thing because people get tired, you can become too autocratic, and things start to spiral out of control, like we've seen many times over in history. The problem now is, I think we saw the Chinese stocks being sold off heavily in the US and Hong Kong. I think just markets just generally nervous, to be honest, with direction China's going, because I don't think it's going that well at all. And you know what? The other thing is they restated their numbers, the growth numbers, and were quite mixed. But right now, I don't believe anything, Dave, coming out of China. To be honest, they are probably just making that stuff up, to be honest.
Okay. Sounds
so
like
I am really, unfortunately, I'm just a very negative person on China at the moment. I just think they are.
I'm not knocking them, because that's exactly what I used to do at school in my exams. I used to just make stuff up and try and get away with it.
I wish they revert back to that. You know, at least if they're going to have that sort of system, you know, communist system, change your leadership every 10 years. So at least you've got a fresh set of eyes instead of one guy running the whole thing.
Well, the danger, I think he wants Taiwan before he goes, doesn't he?
Yeah, well, that's also the big risk, isn't it? Anyway, I am really negative on China at the moment. They are going down the wrong path.
Wolfie, yesterday we talked about we've got to stop thinking about the general markets, because I think the way the world is at the moment, there is an alternative, Tina. Bonds are too scary at the moment. Cash, inflation, good stories, good valuations. It's the way to go. Get your head down, believe in it. You've got 10 for us. Let's have
I do.
Let's have a look.
I do. And just a premise of what I chose and why I chose them. So, you know, we talked about yesterday, like you said, you've gone from the dark side of the light. So in other words, you've become a fundamentalist and you want to nibble on a few things. And I thought, I'm not going to stop you. I like what you're talking to me, Dave. So I am going to encourage that by giving you a top 10 today. So everyone can have a look at it. Like I said, there's no rush into these things. It's stocks that I think have got great management, first of all. They've delivered quite well. And in the next 3 to 5 years, they should do very, very well still, I think. You know, so, and this is on the bigger side of things. So I am going to leave another top 10, the smaller type stuff, maybe Friday or something like that. But today's the bigger stuff. So let's go for them. And drum roll, please, Dave. Thank you. Let's go. Right, yeah, anyway, you spoke about them yesterday already. RRA to start off with.
Yeah, definitely. I think that's a real favorite for me, Wolf, because I just see a lot of support around this $3.
Yeah, I agree. And you know, we talked about it, that it's trading at on a valuation basis at 2014 levels, which is 8 years. Hasn't been trading like this. You always want to buy stuff when it's sort of, you know, trading below what it used to trade. No. And it's great management, so I'm happy with that.
And a stock that gives me 5% dividend with 5 years, I get some growth. Happy days.
Exactly. All right, so that's portfolio builder right there. All right, next one we talked about yesterday was GMG. And you know, again, it's come back. Great management. Have been navigating through pretty much all issues fairly well. Of course, you know, we could see a bit of weakness if the real estate valuations come off a bit, understandably. But generally speaking, I mean, haven't disappointed yet, and they've been very conservative. I like it. Let's see what happens. Like I said, you got to have the long-term view on this before you set yourself. But I think, you know, at $15, like you said, offers good support. So I'm hoping around that, you know, nibble once every blue moon wouldn't go straight. All right, next one on my list is Macquarie. And again, another stock that's really come back to some levels that, you don't usually trade on, that 12, 13 times levels. And again, another conservative business that usually under promises, over delivers, like a GMG. Hasn't disappointed. It could go through a bit of turbulence, of course, over the next 12 months, understandably so. But that's why you don't buy everything all at once. You just nibble away over the next period of time.
But with a 4% dividend, it helps to ease that volatility a little
Pain,
bit.
exactly. It certainly does. You've got a little bit of something out of it if things do go down a bit for you. All right, let's move on to the next one, and that's Sonic Healthcare, SHL. A business that benefited greatly out of the pandemic. That of course stopped, but they're still doing very, very well. If you strip that COVID stuff out, they're testing out, they're still growing single digits, right? So I'm still very happy. The best thing about it is the actual management. They've done fantastically well over a long period of time, Dave. If you look at the chart, it's one of the best charts you can possibly guess, right? Obviously, apart from the last 12 months, which has been COVID induced, and then of course it's been oversold, I think, for myself because of COVID as well. But like I said, everything will stabilize. I think they will return back to its steady growth. And I think it's a stock that really has got a place in our portfolio somewhere.
I mean, you know what? If you actually look at it, Wolfie, I mean, okay, it got a little bit shaky in 2000 with the, when the market went down. They got a little bit shaky in 2008, 2009, but really held up tremendously well compared to everything else. It's been in a trend ever since, and having a little bit of a rough patch again now. But certainly, if you look at the long-term history of the stock, for the long-termers, nibbling somewhere down in this happy little red line, why not?
Absolutely, absolutely. It's one of those that's healthcare is always going to grow, right? There's always going to be demand for healthcare. So it's a theme that will never run out, Dave. So as long as the management plays the cards right and executes the progress and the growth and acquisitions, you should see a steady long-term growth for yourself in this story. All right, let's move on. Another one that's really probably very, very cheap, and you're probably buying it in a way on a cycle, maybe lows. So it's BKW. So it's in property development. It's in building side, but the actual chart is bloody good. When you think about it, it's actually cyclical lows, yet they're delivering actually quite good numbers. So I like this story, Dave. I really like this story.
Yeah, not far off a bicycle on the monthly. So interesting.
There you go.
All right.
There you go. Okay, so next one. Let's move on to Elders. And again, a long-term theme. The food security, agriculture, even though it's going to be volatile, we've seen it with the weather patterns and everything else, the flooding, the droughts, that you name it, right? There's always going to be part of the business that's going to be in demand, let's say, whether they're going to feed the cattle, whether they're going to, need to, I suppose, will and deal with property or whatever. There's going to be, I think, if they led well, and I think they are at the moment, they should do very well. Doesn't matter what environment it is, even though, there might be an ups and downs in agri-space. So I'm liking it. The last update was actually very good, yet it's sort of had a bit of a wobble. But, long term, if you look at it, it's still holding up beautifully on the monthly, isn't it?
Yeah, exactly. And it's a slow tortoise, the way that moves this stock, and it's a slow grinder higher. And again, Wolf, yeah, I totally like it. And why wouldn't you? Why wouldn't you buy this on a long-term chart? And again, you're eased with quite a nice little dividend here.
Yeah, exactly. And the other thing is, if you look at it, it's actually not expensive. It's trading that 11 times, 12 times. I mean, this is just, you think to yourself, this is just what.
But Wolf, this is what we're talking about: getting quality that is not expensive, right?
Exactly.
And Elders is in that category, and a lot of these stocks are ORAs. Macquarie is trading at low levels. Right. So
I mean, you can probably, even like you said, I think GMG is not that far off. It never used to be super, super cheap, but now it's come back to 16.44. I think now that offers a little bit more value. Sonic is quite cheap where it is right now. So, and BKW is cheap as chips. So this is so far, you're buying pretty good value, and you're buying stuff that's been sold down.
Well, definitely, SHL trading 10 times, and very, 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 very sort of inexpensive. And Brickworks at is this correct? 4.5?
I think if you strip all their ones off, probably about 7 or 8. But still very good.
But I'll take it. I'll take it.
Exactly. I think you'll probably still take it with your arms going.
So Wolf, in the stocks you've mentioned, not only are we got stocks on the long term, there's potentially some really decent growth. But the other thing I like about these stories, a lot of them are also giving a nice little dividend.
There's a lot of things to like about it. Management is number one for me, right? I looked at the stuff that's actually been delivering. They haven't had any supposedly issues, so they've been delivering market after market after market. Like you said, dividend is a little bit of a bonus, right, for me. So that's like almost like a plus if things get a little bit shaky. And hopefully some of them are trading in places where they haven't traded for some time, and cheap or below the long-term averages.
Right. I'm liking the first 6. Let's have a look at
next one. Where's Farmers?
Okay.
Perennial, great story. It will probably be volatile over the next 6 to 12 months because of the inflation, because of still the constraints and logistical problems. And I know, I've seen some of the shelves being empty and not being quite replenished as quickly as they used to be. So they'll go through a bit of turbulence, but you know what? Now I'm seeing it in the low 20s, PE wise. We remember we used to see it in the 30s and 40s not that long ago. I don't mind this, have a nibble, long-term nibble, because it's led beautifully. I had a look at this Mount Holland project, Dave. It looks good. It's one of the, I told you yesterday I was doing a bit of work on the lithium stuff, right? It's one of the best projects around. It is a really, really good project, this Mount Holland. So, could add a bit of spice to the actual numbers over the next 3 to 5 years. So there's a lot to like about it. They bought API recently as well. I'm just wondering how they're going to go with all this stuff. But I'm betting management. This is what I'm sort of forgoing the short-term volatility. I'm looking at the management and thinking they are very astute. They know what they're doing. I think they've done a beautiful job with that Mount Holland. Bought recently API. I'm sort of thinking, okay, something very different for them. Can they extract value out of it? This is going to be their test. I'm happy to have a little nibble to start off with.
And you know what? I'm seeing a dividend as well at this of about 4%. So
there you go. So it gives you another little bit of a incentive, doesn't it?
Well, it just helps. Okay, I'm getting even more excited now for number 7.
There you go. Okay. How many we've got? We've got 1, 2, 3, 4, 5, 6, 7. Okay, number 8 is CSL. And I'll tell you why. It's been languishing. Well, not languishing, but it's going sideways for the good part of 2 years, right? The actual valuation is starting to catch up. The growth is starting to look like it's accelerating. They made a very interesting acquisition recently as well, which is actually adding quite a bit of the top and the bottom line. They've said they're going to, the latest update, which was only about within the last month, was they're going to grow by the double digits again. So I'm starting to think, okay, post-COVID, they had the issues during the COVID because they couldn't access certain parts of the market. I'm liking this long term. I'm happy to have a nibble here and there, around these levels and go for the future.
I like it. Well, look at this story. For a quality story, never broken a monthly trend line.
I know. It's been an absolute standout. And you know what? And I think the future is bright. They're in the blood products, doing a lot of biotech stuff as well. I think there's going to be, it's probably, to me, top 10 biotechs globally. If you're going to buy anything biotech, look at your homegrown stuff. CSL is one of the best. All right, let's go to the next one, and that's Worley, WOR. And again, I'm a really big believer of this story because, like I said, they are positioning themselves for the future, and the future is undoubtedly renewables. Someone's got to service them, someone has to build them, someone has to maintain them. World is positioning themselves beautifully this day. And there's a scramble at the moment for renewables. There's a scramble in Europe to build these LNG plants to get the gas and stuff inside Europe because of Russia. And so there's going to be a lot of work. There's been a period now over the last probably 5 to 10 years that a lot of the big players like the Shells, the BPs, and so on, didn't quite invest enough money So now they're probably going to be scrambling around and trying to catch up a little bit, right? So I think the future looks bright for Wally. I like it. Traditionally, probably the only thing I could say about this, and it could change very rapidly because the bottom line is actually catching up now, is that, if you look at the numbers, it's trading 40 times, but that should drop down significantly next year.
Right. And again, you've got a little dividend on this one.
Yep.
Wolfie, about 3.5%.
All right. Last but not least, we haven't talked this one about for a while, and I've been sort of hanging back, looking at it, trying to work out how it all fits together. Aristocrat Dave, ALL. But I think I'm happy with what I've seen, and it's holding on beautifully on the monthly, and they're going to come up with their update in November. So in other words, not that far away now, when they're going to update the market with the full year results. Now, I had a look at the last commentary from the company. They're growing between 20 and 30% still. I had a look at what they said. If we're going to achieve our guidance, this has to happen in the markets. And I think that's been happening for the last 6 months. So I think they should hit those numbers. So it's all about probably now the outlook for going further down. They talked about the Ukraine. I remember, I talked about that a little bit risky for me with the Ukraine, but they've been managing actually quite well out of that. So I'm much more comfortable now after six months of just watching and the commentary. So I'm happy to have a nibble on this. I think this is one of the better companies on the ASX. They've been doing quite well, and unfortunately, gambling, casinos, and all that thing, that's never going to go away, unfortunately. So they're probably going to, if they're going to keep playing the cards right, they're going to probably keep growing at that sort of pace.
All right, and again, Wolf, you look at, I can argue the case technically. It's sort of buying around the monthly for taking that long-term point of view has done well historically. So again, another tick. Wolf, really exciting that. Sort of, I say ASX top ASX 300 stocks.
Yep, really, probably even now. If I'm just looking at it, I think probably even
200. Yeah, 200, wouldn't they?
Yep.
Most of those, if you average them out, I reckon there's a dividend around 4%.
Okay.
Which I wouldn't say no. That accumulating around this sort of level. This is what we have to look at now, Wolfie. We've got to look at value. Stocks that have got value, they've got a future, they're strong stories, and you've delivered 10 here, which I think can knock the socks off. Just one stock you haven't got in there, Wolf. Can you tell me why you didn't put your little SWM in there?
Oh, look, it doesn't quite fit the criteria of what I was looking for. I was looking for steady as she goes over the last 5 to 10 years, good growth. And this has been up and down like a yo-yo, right? So it's a little bit on the riskier side, even though it's a good story in a way, it probably just falls outside my criteria when I was looking at the top 200 stories. So, there's a number of stories that I'll probably go in the next load. So I'm going to go another top 10, but the smaller type stuff, right? There may be the more riskier type stuff, maybe a little bit more expensive, but bit more growth. I'll go through them in the next top 10.
All right, that's brilliant, Wolf. I think that's one of the best videos we've done for a while. I think that is so important that people look at these and have a look at the idea of maybe start nibbling away. On that note, Wolfie, thank you very, very much.
Thank you. Cheers, guys.
Thank you. Bye-bye.